Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, ES. Front month, we're looking at a last print of 830.50. Here's Friday, the 3rd of April, and we're looking at Thursday, Wednesday, Tuesday, and Monday. We're going to go ahead and scroll back a little bit and look to see where the market was. Last Friday we did mention that we're seeing a divergence amongst our indicators. These are proprietary indicators. You did have the bulls in control here, but the bears certainly accelerating on the day. We did have a lower open last Friday, and essentially we did get a flat close, which was to be expected, as we mentioned in last week's video. The bears did ultimately win out, as you saw a nice gap to the downside on Monday, and full confirmation amidst a quadruple bearish scenario. We had an accelerating bearish scenario here, full bearishness there, full bearishness albeit slightly diverging there, and full bearishness here was the case on Monday. Was a nice day for our portfolios on Monday, and we'll look at our numbers in a second. Going into Tuesday, we did have a reclamation of the trend, a nice gap higher to the open. Was it confirmed? Actually, yes. Our primary indicator was suggesting bullishness with accelerating bullishness. We did have a very nice divergence, albeit bearish. It was a bullish divergence, one could argue, and we had full bullishness here. So certainly a nice move. What was interesting is I believe we actually took a loss on Tuesday in the lion's share of our methodologies and systems because this was a bit of an errant move. One could argue that, yeah, we did see some bearishness here, and certainly bearishness developed there, so that suggested that we might get this gap lower, but ultimately you see these players, whoever was selling, was in fact they were in fact wrong on the market and should not have been selling, because ultimately the indications were that the market would move higher. So we did get this correction right there on the day following, but a very nice move from 780 to 840 within, we'll call it a day and a half. So those expecting the market to move higher certainly could have taken advantage of this bear trap, essentially a bear trap, and a nice move higher to the amount of about 60 to 70 points in the S&P in about a day and a half. So where are we now? We did have the full acceleration bullishness there, some bearishness there, bit of a mixed picture, and as you can see, the market has been essentially mixed. We have almost a go nowhere action in this indicator, our primary indicator, and we have a full bearishness here in a market that is essentially unchanged, down just 4 points on the day. So a bit of a neutrality standpoint, one would argue, in terms of the intraday. There's our, let's see, what are we looking at here? We don't need this. Look at the S&P System 2.0 just nailing the turn, 790 to set to 835. Almost the lion's share was the long in the S&P System 2.0 for that move. There's our day trader 5.0 putting up some, very impressive was the long gain there from 7,500 to 7,700, a little bit more we're looking at, but what we're looking for is a chart of the daily market. This is the S&P cash market, and as you can see, we have confirmed had a little bit of a problem with our bullish, newfound bullishness on official market timing basis. We did move back to bullish, as mentioned prior, on reclamation of the 800 level. We now sit at 835. If we scroll out, we can see just where the market has been. Certainly has a fair way to go, but just on this swing point high here, we'll call it 875. So there's another 40 points at least. We certainly expect to get to 900 in relatively short order. As you can see from a momentum standpoint, we are intermediate term bullish now, as well as short term bullish. From a directional movement perspective, the intermediate term certainly hasn't caught up. Got a long way to go there, but certainly short term is the bullish case from a directional movement perspective. From a trend following perspective, for our intents and purposes, we are fully bullish, although the mother of all trend following support resistance measures certainly comes in as major resistance around 975. So we should expect this high around 950. Maybe we can get to 950, get a nice little pop, and certainly a test of there, but we do expect to continue to see higher prices in stocks, as we have now moved back to official bullishness after taking short profits at 683.38 on March 6th. So a nice 150 points move higher as following that. So we're going to go ahead and look at our portfolio, see where we have been. And let's see. Oh, look at this. Well, here was Monday. We had a nice day on Monday, up $8,000 for the black. The swinger DT was up the 10%, was the leader for the day. We did take a loss in most of our portfolios, small losses, about half of the gains of the day prior. And then Wednesday was a nice banner day move, especially for our dual day trader DS. Our dual day traders continue to just outperform the lion's share of our portfolios, with the exception of the MAP DT, which continues on. We'll go ahead and look over here. There's our nice 4-day numbers, 30%. It certainly has outperformed. The dual day trader over the last 40 days has outperformed everyone else with a gain of 30%. The MAP Black coming in just 4%, but nice little double-digit returns. But if you look at the MAP Black or the MAP DT is still up 75% over the last 18 days, and certainly is besting everyone in the category with very impressive gains. But as what's interesting is here we have the venerable MAP Black, which is a $100,000 portfolio, very diversified portfolio, but still puts up aggressive. One could argue it's an aggressive portfolio. Aggressive numbers, putting in a gain of 49,392.50 just over the last 18 days at 50%. So just a very impressive portfolio, considering the size being $100,000 of risk capital. But what's interesting is the MAFX Lite continues to just be astounding, with yesterday yet another gain of $6,500. We had a banner day, almost 100% gain. I believe it was a couple of weeks ago, and we did promote that. But here we go again with a $6,500 gain just yesterday. As you can see, 65% on the minimum account recommended of 10K. Obviously, probably be better if you went with 20K, maybe even 30K, just depending on how much risk you wanted to take. But for those risky traders on the riskiest side of the spectrum, 10K certainly will get you into the portfolio, and you can put up numbers like that in a single day. So if you are interested in any of these portfolios, you can certainly go to the website, click right here, click live chat, speak with the support representatives, or you can choose an email to admin@MiniAnalyst.com. And right now we have on special actually the MFX Lite, or let's see, actually the MAP Black is on special. So we'll go ahead and just click on the black portfolios. If you're interested in that, you can save $500 right now. So just go ahead and click MAP Black, or actually just add to cart. Now you can either get the MAP Black or the MAP Black version 2.0, and what you do is just enter in promo code video and apply, and you can save $500 there. And you can go back over here and go to a MAP DT, even the version 4.0 HR. Go ahead and add that to the cart, and you can save another $500. So any MAP DT version, you can still save $500 by entering promo code video, or if you're interested in the MAP Black, just enter promo code video, and you can save $500 this week on those two portfolios, or at least throughout the weekend into next week. We hope you guys have enjoyed the video, and we will see you next time. If you have any questions, shoot us an email or go to the website and chat with the support team. We'll see you.